Hi there. Thank you so much for joining me today. My name is Rochelle Colina, and I am CPA and Managing Director of Honest Buck Accounting. Honest Buck is a full-service accounting firm that specializes in serving early childhood education businesses. So first of all, I want to apologize for the poor quality of the video. I'm currently in the middle of moving, and on top of trying to hide boxes, I also don't have any window coverings right now, so the light is definitely messing with the video, so I apologize for that, but hopefully it won't detract from the quality of the information that we're trying to give you. Today we're going to be covering the Paycheck Protection Program, the loan forgiveness rules, and the application. Okay, so these slides are going to go into a lot of detail. My hope is that you'll be able to look back on them as a guide when you're applying for your forgiveness through your lender. These slides and a recording of the webinar will be sent to you via email in the next day or two, so no need to frantically jot down notes. Also, I will be answering questions at the end, so please hold on sending them over until then. Okay, so the Paycheck Protection Program is a first of its kind program aimed at providing employers with the funds needed to keep the American workforce intact. As often happens when starting a program where there's no real precedence and it's been slapped together rather hastily, there's been a lot of confusion. There's constantly changing rules, and many employers are feeling scared because they don't know how much will be forgiven. Luckily, the PPP Flexibility Act, which happened back in June, issued some additional guidance that allows for better chances of 100% forgiveness. Now, before I get into the details, I do want to mention that as a CPA, I can only advise on the current rules of the PPP program, but a lot of people reach out and ask if they think we'll pass an automatic forgiveness for all PPP loans under $150,000. The answer is, I hope so. But we won't know that for a bit, I'm guessing. I mean, at this point, we haven't seen anything change, and I honestly don't know if we're going to see anything before the presidential election, to be perfectly honest, just based on how the last few weeks have played out. So right now, we're going to discuss the rules as of today. Like, admittedly, they could change, but, unfortunately, I can't advise on speculation. Okay, so let's start with some basic info. What are the qualifying expenses, otherwise known as the expenses you're allowed to use on the PPP loan that count towards forgiveness? These expenses, they include payroll, mortgage interest on business property, not on your home, rent or lease expenses for business property, and unfortunately that lease has to have been put into place as of February 15th, 2020 to qualify, and utilities. Payroll needs to make up at least 60% of the qualifying expenses. And what is included in payroll expenses, it's gross salary or wages, gross tips, gross commission, paid leave, severance, and employee benefits, such as the employer's match on 401k contributions or the employer's portion of healthcare plans. Note that if you use the FFCRA, otherwise known as the Family First Coronavirus Response Act, to pay for your employer's employee sick leave or leave of absences, that amount is not eligible to be included in the forgiveness calculation. How does my FTE count affect my loan forgiveness? If your FTE count, or otherwise known as your full-time equivalency count, is not restored to pre-COVID numbers at the end of the 24-week period, the amount forgiven may be reduced. However, the PPP Flexibility Act has included some safe harbor rules around this, and the forgiveness is more likely even if you don't manage to restore your pre-COVID FTE numbers. So can I prepay expenses in order to include them in my forgiveness calculation? No. In order for the expenses to be included, it needs to be both incurred and paid. If it's not owed to the vendor at the time of payment, such as paying October's rent in early September, it is not yet incurred. Okay. So the amount that's forgiven is dependent on four things. First is the dollar amount spent on the qualifying expenses. The percentage of wages to other qualifying expenses, again, payroll has to be at least 60%. The FTE count compared to prior periods, and the reduction in employee pay compared to prior periods. If you reduced an employee's wage by more than 25%, this can reduce the amount of the loan that is forgivable. So what do you need in order to apply for your PPP loan forgiveness? So first, you'll need your business EIN number, your PPP loan number, and the lender PPP loan number. This will come from the note that you signed with your lender. The Paycheck Protection Program distribution date and amount. Again, this will come from your note that you signed with your lender, or you can take a look at your bank account and see what day it was deposited and the amount that you received. The total paid on lease or rent payments, business mortgage interest payments, and utilities paid. Your payroll history for the 24-week forgiveness period. This includes each employee's average wage and total pay. To clarify, you can still use the 8-week forgiveness period, but I really haven't found a single scenario where it's more advantageous to use the 8-week period versus the 24-week period. I'm going to highly recommend using the 24-week period for forgiveness. You're going to need the total amount paid to general partners, self-employed individuals, or owner employees. It's important to note that this information will be reported separately from the other employee's salary on the standard forgiveness application. This is because there's limitations on the amount that can be requested for forgiveness under these categories. You're going to need your payroll history for the first quarter of 2020, and you're going to need the amount paid for employee compensation, local and state taxes, and employee health insurance. And we're going to go over where to find this information. You're going to need your average FTE of each employee during the forgiveness period, as well as the average FTE of each employee during your reference period. And we'll discuss how to calculate this. And let's first, though, discuss where to find your payroll reports. When we talk about payroll reports, we're actually discussing two different reports. So first is the report that tells us how much of our payroll is allowed to be included in the forgiveness calculation. And the second is the payroll reports that are needed for the forgiveness application. So they are two separate reports, as the forgiveness calculation report excludes out federal taxes and any wages that may not be allowed for forgiveness, such as the FFCRA sick leave. And again, you'll get a copy of this deck, so no need to frantically write all of this down. So first we're going to start with the QuickBooks reports. So this first report will show you the amount eligible for forgiveness. You won't go to reports. For this one, you're going to go to payroll, and under the COVID-19 resources, you'll find a report called the Payroll Cost Report for PPP Loan Forgiveness. And you can see that right here. We're under payroll, we're under COVID-19 resources, and we see it right there. Okay, so the second report in QuickBooks will be included under the normal reports menu. This report is used to provide your lender the information needed to support that you paid your employees and the dates that you paid them. So in QuickBooks Online, you'll use the search bar in the reports menu and type in payroll details. Once you get to this report, you'll set the date range to custom and include the beginning and ending date of the 24-week period. And you'll want to make sure that you select all employees right here, not just active employees. If it's set to just active employees, your report won't include any employees that may have been paid during the covered period, but have since separated from your business. You'll also want to include all work locations unless you have a location that's outside of the United States. Only US-based wages count towards forgiveness calculation. Once you have the report parameters correctly set, run the report and export to Excel or a PDF. Do note that if your lender asks you for any other payroll documentation for other periods outside of the covered period, you can still use this report. You just need to change the date range. Okay. So it's the same drill for paychecks. So first we need to pull the PPP forgiveness data, which includes only the wages and taxes that count towards the forgiveness calculation. First you'll go to analytics and reports, then to view all reports, then to PPP forgiveness data. Then you'll select create report. The custom date range you use will be the beginning and the ending dates of the 24-week period. So you can see that right here. Okay, so for the documentation that you need to provide your lender to substantiate all of payroll, you will provide your payroll journals. To find these reports, you'll go to analytics and reports, then to view all reports, then to payroll journal and create the report. Again, the custom date range you will use will be the beginning and the ending periods of the 24-week time period of the PPP loan covered period, unless the lender asks you for other dates to be supported as well. And again, you'll just change those dates in the report. Okay. So for ADP, you'll find the 24-week forgiveness costs if you go to reports, then to PPP forgiveness reports, 24-week forgiveness cost, and then create the report. The date range will be the first and the last date of the 24-week period. Again, you can see that there. Okay. To find the payroll details report in ADP, you'll go to reports, then payroll details, then 24-week forgiveness detail, and then you'll create the report. You'll need to provide your lender with this report for all payrolls ran in the 24-week period. Here you can see we're only looking at like one period. Sometimes ADP can be a little glitchy and may only let you run one period at a time, but if it lets you run for all 24 weeks, obviously that's what you would want to do. Okay. So when filling out the payroll data on the forgiveness form, you have to treat owners' payroll differently than all the other employees' payroll. For the purposes of the PPP forgiveness application, owners are not included in the FTE equivalency calculation. They must be removed from the FTE calculation. So further, there's a cap on how much an owner, employee, or a self-employed individual can pay themselves and have it forgiven. For the 24-week covered period, this is capped at 2.5 months worth of their 2019 compensation, or $20,833 per person, whichever is less. And this is across all businesses owned. So you can't take, if you have 3 different daycare centers, you can't take 20,000 from one, 20,000 from the other, 20,000 from the other. The total amount that the owner can have for their compensation to be forgiven is $20,833 across all 3 businesses, all businesses. For the 8-week covered period, it's capped at 8 weeks worth of their 2019 compensation, or $15,385 per person, whichever is less, across all owned businesses. So again, for that one individual, like that one owner, no matter how many businesses they have, it's capped at that one amount for all three or all four or how many you have. Okay, so there are 4 things that you must do if you are including compensation to an owner. So first, you have to apply a cap on their cash compensation. You have to remove their payroll costs from the general employees pools and record under owner's compensation instead. Adjust the FTEs to remove the owner and adjust the wage reductions if the owner's wages were reduced more than 25%. Okay, so now let's talk about the FTE or full-time equivalent rules. And this seems to be the most sticky place for most owners. So we're going to try to do what we can to help you understand this as much as possible. Okay, so the new PPP Flexibility Act has substantially decreased the constraints around the eligibility for loan forgiveness. So first, let's talk about the reference periods. The reference period is the time period that you compare your pre-COVID and post-COVID FTE counts. So for pre-COVID FTE counts, you can use the average FTE number from either February 15th, 2019 through June 30th, 2019, or from January 1st, 2020 to February 29th, 2020. So there are some additional periods that are available for seasonal employers, but we're not going to dive into all of that here. If it applies to you, feel free to reach out and ask those questions specifically. So now let's talk about the safe harbor rules. So safe harbor rules mean that if you meet the criteria of these rules, you're automatically deemed to have complied with the FTE rules for forgiveness. So currently there's 3 methods to establish safe harbor. So the first one is that you had no reduction in employee or average paid hours. So it's pretty simple, like nothing changed for your employee count or your employee hours from the pre-COVID and post-COVID reference periods. So second is safe harbor number 1, which is unable to operate. So this means that your business was unable to operate between February 15th and the end of the covered period at the same level of activity due to requirements set forth by a governing body. So this is important to note. With this rule, it does not say unable to operate in general. It says unable to operate at the same level. So this means that if the government, health organization, or any other body that governs your center said that you can only operate at 50% capacity during that covered period, and again, it has to be the whole covered period, you would qualify for this safe harbor rule. So it's definitely something to think about. Thinking about it now, it could be the one reason to use the 8-week period. If you were able to spend all your money, and during that 8-week period, you were unable to operate, so you get full-time FTE, that there might be an argument there for using the 8-week period versus 24-week, especially if things opened up for you after the 8-week period, but you still weren't able to get your FTE count where it needed to be. There might be an argument there, but I would say that's probably going to apply to maybe 1% of the population. So that I would probably contact your CPA or a trusted advisor about if you think you might fall into that bucket. Okay. So your third option is called Safe Harbor number 2, restoring FTE employee levels. And this states that if the borrower is able to bring its FTE levels back to pre-COVID reference point by the last day of the covered period, no later than December 31st, 2020, you are considered to have no reduction to FTE when calculating your forgiveness amount. So for example, if January 1st to February 15th, 2020, your FTE equivalency is 10 employees, and on the last day of your 24-week covered period, you're back to an FTE equivalency of 10 employees or more, you don't have to reduce your forgiveness amounts by the amount of your FTE equivalency drop in between those dates. One thing to note is that compliance with either of the FTE safe harbors does not eliminate the potential for a decrease in loan forgiveness based on the salary hourly wage reductions. The FTE reduction and the hourly salary wage reductions are separately administered, and we're going to take a look at the wage reduction rules in a bit. Okay, so per the guidelines of the SBA, the accepted methods for calculating FTE equivalency is either to add the total employee hours per week and divide by 40, or calculate every employee who worked 40 hours per week or more at 1, and use 0.5 for all employees that worked less than 40 hours per week. Then it added up to determine the FTE. So you can use either one of these methods, but you must be consistent for all periods. And I know I've had several center owners reach out and say, but I consider somebody who works over 32 hours a week to be full-time. Well, yes, but we're not talking about like how you kind of consider if they get insurance. We're considering the SBA forgiveness rules, and these are the rules that were put forth by SBA. So just because the SBA says full-time is 40 hours or more, that doesn't mean that you need to change the way you're thinking about your employees. It just means for this one special circumstance, these are the rules. Okay. So borrowers are allowed to add back in any FTE for any positions for which the employer made a good faith written offer to rehire, which was rejected, or any employees who were fired for cause, voluntarily resigned, or voluntarily requested and received a reduction in hours. So if the positions were refilled during the covered period, then borrowers are required not to double count such positions. Further, to add these FTEs back into your count, the individual to whom the offer for rehire was made must have been an employee on February 15th, 2020. Also, the employer must be unable to hire a similarly qualified employee for unfilled positions on or before December 31st, 2020. Whew. So one important note to make here is that if you made a good faith written offer to rehire and it was rejected and that person is still unemployed, you are required to report that to the state unemployment agency in order to add that person back in. Okay, so there are two different applications that can be submitted for forgiveness of the PPP loan. So there's the easy application and the standard application. To clarify, banks and lenders that are participating in PPP lending are going to be creating their own forgiveness portals. So you likely won't be submitting the actual form 3508 or the EZ form. However, these forms are required as part of the documentation you must keep in case of audit, and we'll talk about that here in a bit. Okay, so you're allowed to use the EZ form if you fit the following criteria. You're a sole proprietor with 0 employees, or you're an employer who did not reduce wages or salary for any employee by more than 25% during the covered period. If you qualify under this umbrella, there are 2 more qualification criteria that have to be met. First is that you were unable to operate at the same level of business activity during the covered period as you were before February 15th, 2020 due to government mandates government mandates of a government body, but a little redundant. or you did not reduce the average paid hours of your employees or reduce the amount of employees. And this takes place between the dates of January 1st, 2020 through the end of the covered period. If you don't meet this criteria, you will need to use the standard application. Okay, so we're going to start by looking at an easy form. We're going to be making the following assumptions. So first, the loan amount is $100,000. The covered period is 24 weeks starting April 15th, and starting April 15th and ending September 30th. There were no salary reductions for the employees, and there was no FTE equivalency reduction for the employees. So you can see we showed 10 employees, 10 employees. You can see we've included the business's legal name and the address, the EIN number, phone number, etc. We will take the SBA PPP loan number from the SBA authorization documents, and we'll take the lender PPP loan number from the lender's note payable. You can see that we had 10 employees at the time of the application. We have 10 employees at the time of forgiveness of the application. We took no EIDL advance. We will discuss how the EIDL advance affects your PPP loan a little bit later. And we are assuming that we have a biweekly pay period. If your pay periods are weekly or biweekly, you can choose the alternative covered period, which starts on the date the first payroll is paid after you receive the PPP loan. Do not check the box that says $2 million unless you want an automatic audit. Okay, so on line 1, we're going to enter the qualified payroll costs from the PPP payroll reports that we discussed earlier. This was the first report we ran for each system, and it includes only the expenses that qualify for forgiveness. On the easy report, the owner's pay does get included in box 1 with all the other payroll costs. This won't be the case with the standard form, but again, owner's pay is limited to $20,833 for the 24-week period. On line 3, we're entering our rent and our lease payments, and on line 4, we're entering our utilities payments. Then on line 5, we're adding the first 4 rows together. On line 6, we're entering our PPP loan amount, and on line 7, we are dividing line 1, which is the payroll cost, by 0.60. The reason for this is to determine if payroll counts for 60% of the total amount requested to be forgiven per the forgiveness rules. And then for line 8, you'll enter the smallest number that is included on lines 5, 6, or 7. That number is the amount that you are, amount of forgiveness that you're applying for. So you can see in this example, the smallest number was the loan amount, so we're asking for 100% forgiveness. Okay. Once the main page on the EZ form is filled out, you will have to move on to the certifications. And these are items that you need to attest to in order to state that you followed the PPP rules when you took out the loan. You believed that you needed the loan in order to continue business when you applied, and you used the loan for exactly what you were supposed to. Be sure to read each line before you sign. Providing false information on the certification document may result in fines and legal prosecution. Okay, so they're really all there is when it comes to the EZ form. It's just those 2 pages, but you do still need to provide all the supporting documentation to prove that you spent the PPP money properly. This can include the payroll reports we looked at earlier, quarterly payroll tax filings, rent or lease agreements, utility and mortgage bills, and copies of canceled checks or bank statements proving the payments were made. Okay, so the standard application form is quite a bit more involved. For this example, we're making the assumption that the loan amount was $100,000. We're using the 24-week covered period, and there was no salary reduction, but there was an FTE equivalency reduction of 30%. So the top half of page 1 is exactly the same as the EZ form, except that we are stating that we had 10 employees at the time of the loan application and 7 employees at the time of the forgiveness application. Okay. We're going to leave the first page and go all the way to the back of the application. And this is the way the application is set up. The back page has to be completed before the page in front of it, and so on. The pages in the back are feeding info to the pages in the front. The back page is called the PPP Schedule A worksheet, and this is where we're going to list out detailed records of our employees and their wages. So Table 1 is to list out all employees paid during the 24-week period that earned less than $100,000 in wages in 2019. If you need more spaces than the 7 boxes provided, you can attach a spreadsheet or a Word document that lists out all the requested info. This includes name, social security numbers, wages paid during the cover period, the employee's FTE quotient, and the amount of wage reduction. So while this doesn't explicitly state this on the worksheet that we're looking at now, if you look at the instructions for this form, they do state that you only need to include the wage reduction amounts if the wage reduction for the employee is over 25%. If the wage reduction is under 25%, you don't need to report this. This is only for wage reduction, not for hours reduction. And we will include the totals of the schedule in boxes 1, 2, and 3. Okay, so Table 2 is to list out the wages and the FTE quotients for employees that were paid over $100,000 in 2019. Please do keep in mind that if you have employees that were paid more than $100,000 in 2019, there is a cap on the amount that you can include for their salary on Table 2. So for an 8-week period, covered period, it's $15,385, and for a 24-week covered period, it's $46,154. So once Table 2 is filled out, sum up the boxes to fill in boxes 4 and 5. So the next section on the Schedule A worksheet is to test if you qualify for Safe Harbor 2, which is you restored the FTE employee levels as you needed to. On step 1, we enter our average FTE between February 15th and April 26, 2020. So we say we had 5 at that point. On step 2, we enter the FTE count on the payroll cycle that included February 15, 2020. So at that time, we had 10. So for step 3, if the number included on step 2 is greater than step 1, then you can go down to step 4, which is what we're going to do in a second. If this isn't the case, then they're already saying Safe Harbor doesn't apply to you. And you aren't applicable, and you'll need to calculate your FTE quotient on the Schedule A. So since our step 2 figure was larger than step 1, we will continue to step 4 and include the total FTE on the date the application was submitted, assuming that we submitted before December 31st, 2020. So for us, the number of FTEs on the application date was 7. So since our FTE count was lower on the date we submitted the application than it was on February 15th, 2020, we don't qualify for Safe Harbor number 2. Since we don't qualify for safe harbor number 2, we have to complete the Schedule A FTE reduction calculation. Okay, so now we're going to look at the FTE reduction calculation on the Schedule A. As discussed before, there are a few exceptions to the rules on this calculation. So the first is that there was no reduction in employees or average paid hours. And that would be right here, you'd click this box. Since we don't qualify for that in this example, we won't check that box. Next is safe harbor number 1, which is the unable to operate safe harbor. And if we met that, we would check right there. So for this example, we're going to say that it does not apply to us because there were no regulations in our area that said that we needed to close or reduce operations. We just found that less students were attending and we had to reduce our staff accordingly. So then we'll move down to safe harbor number 2, which if you recall on the last slide, we didn't meet, so we won't check that box either. So instead, we're going to fill out line 11 and line 12, noting that line 12 is referring back to the Schedule A worksheet that we completed, listing out all the employees paid during the covered period. And then divide line 12 by line 11 to get our FTE reduction quotient. Now, I would say, honestly, all of this is a long walk for a short drink of water. I feel like it's very complicated, but unfortunately, it seems to really be a sticking point with legislation, so it's just something that you're going to have to work through. So our FTE quotient was 0.7, and that number will be carried forward onto the front page of our forgiveness form. But first, we have to fill out the rest of Schedule A. So in line 1, we will include the box 1 wages from the worksheet that we did. In line 2, we'll include box 2, which is the FTE count from the Schedule A worksheet, and in line 3, we'll include box 3 from the Schedule A worksheet. Box 3 was the wage reduction, and in the example, we had none. Lines 4 and 5 are for boxes 4 and 5 from the Schedule A worksheet, but since we had no employees who earned over $100,000 in 2019, these lines are blank. In line 6, we include health insurance premiums paid by the employer during the covered period. Note that you will not include amounts deducted from the employee's pay, only the employer contribution amount. Line 7 will include the amount of retirement contributions the employer paid during the covered period. Again, this is not the amount your employees contributed, but the amount that the employer exclusively paid. And line 6 is the state and local tax amounts that were paid by the employer. Line 9 is the compensation to owners. So as we previously discussed, owners are not to be included in the FTE calculations, and their wages are to be reported separately. And the amount of the wages allowed in the forgiveness calculation are capped at $20,833. You will then add up lines 1, 4, 6, 7, 8, 9 to get to your total payroll costs. Okay. You'll then transfer the total payroll cost to line 1 on the first page of the application. So you can see that here in line 1. And then you'll also include the amounts for mortgage, rent, and utilities. On line 6, you will add up the total of lines 1 through 4. And then on line 7, you will include the FTE reduction quotient that we calculated a few slides back, so that 0.7. And then on line 8, you're going to multiply line 6 by line 7, and this gets you to your modified potential forgiveness amount. On line 9, you'll include the amount of the loan, and on line 10, you will divide line 1, which is the total payroll cost, by 0.6 to ensure that the total forgiveness requested includes at least 60% payroll costs. And finally, on line 11, you'll enter the smallest number from lines 8, 9, and 10, and that will give you your forgiveness amount. As you can see, even though we had a reduction in FTE, we were still able to qualify for 100% forgiveness of the entire amount. And this is due to using the extended 24-week covered period. Okay. So now let's look at an example where there is a wage reduction of 33% and the business was unable to operate as usual due to state mandates. So the difference that you will see on the application is the use of the wage reduction column. Again, we only use this if the wage reduction is more than 25%, and in our case, we're saying that our wage reduction was 33%, so we're going to use it. So for the FTE reduction calculation worksheet, we're electing safe harbor number 1. As we were unable to operate at the same pre-COVID levels due to the state mandates. As you can see, we checked the box for safe harbor 1, and in line 13, we entered 1 as we met the criteria above. Okay. So similar to our prior example, we'll use the information we included in Schedule A worksheet to complete the Schedule A here. The only difference is on line 3, we will include the amount of the wage reduction. And now we are going back to the front page of the forgiveness application, and again, everything is the same as it was in the last example, except that we're including the wage reduction amount on line 5. So this time when we complete line 6, we'll add up lines 1 through 4 and then subtract line 5, which is the wage reduction, to get to the modified potential forgiveness amount. We'll then include a 1 on line 7 as we're using the FTE safe harbor number 1. And we will multiply line 6 by line 7 and put the total on line 8. Again, line 9 will include the PPP loan amount, and line 10 will be the total payroll cost divided by 0.6. So on line 11, we'll enter the smallest number of lines 8, 9, and 10, which is $100,000 in this example. So again, we have $100,000 or 100% forgiveness, even though we had a fairly high reduction, wage reduction to account for. Okay. So as mentioned before, your lender will provide you with an application portal to apply for forgiveness. However, the SBA has put together a list of documents that must be maintained, and this does include the applications that we just went over. So the full list is that you'll need the PPP Schedule A worksheet with the documentation of each employee, including salary and wage reductions, tables 1 and 2, documentation of rehire, refusals, firings, resignations, reductions in work hours. All records relating to the loan, including the loan application, certifications for the loan request, and the borrower's compliance with loan requirements. These documents must be retained for 6 years after the loan forgiveness or the loan is paid in full, and permit inspection of the documents on request. If it turns out that you're not 100% forgiven for the PPP loan, first, if you took out both the PPP loan and received an EIDL advance, the advance will need to be paid back as part of the PPP loan. So the EIDL advance is the small amount of EIDL that you received up front that was based on the number of employees you had. Under the PPP Flexibility Act, the loan term has changed from 2 years to 5 years for applications submitted after June 5th or later, or by mutual agreement for loans prior to June 5th. So if you do owe, be sure to follow up with your lender to ensure that your loan terms are in line with what you can actually pay. The 24-week forgiveness period, going from 8 weeks to 24 weeks, that's an automatic thing that happens. There's no need to go back to the lender and ask for permission, but changing the loan period from 2 years to 5 years does require you to go back to the lender and change those terms. Loan forgiveness is to be applied for within 10 months after the last day of the covered period, or it converts to a loan. Payments on the loan start 10 months after the end of the covered period. And the PPP loans have a 1% interest rate. Okay. The loan forgiveness application requires a representation and certification page with the signature to be submitted. So again, the borrower must certify that they know and understand the rules of PPP, including eligibility, use of proceeds, loan forgiveness amounts. The SBA may review PPP loans and loan proceed applications as it deems appropriate at any time. Lenders are required to confirm the calculations on the loan forgiveness application, and PPP loan reviews will require the lender to ask the PPP borrower to respond to any questions, and the SBA will consider all information provided by the borrower in its review. If for some reason your forgiveness application is rejected, the SBA has established rules and timelines for appeals. So don't despair. There are safeguards in place. Okay, so how will all of this affect your 2020 federal taxes? So while forgiven PPP proceeds are not considered taxable income and you won't be receiving any sort of 1099-C cancellation of debt from your lender, you are not able to deduct the expenses paid for with forgiven PPP proceeds on your 2020 tax return. So what I don't feel yet has been considered or has not had any rulings put out on it is we are currently, we're almost in the fourth quarter of the year, or we are in the fourth quarter of the year. And most banks that we've dealt with have not even opened up their PPP forgiveness portals. So the question that I have right now that I don't have an answer to, but it's something that I kind of want to put in front of you so that you kind of you can ask your tax preparer when that time comes is, if your PPP loan isn't forgiven by the end of the year, do you still have to take out all of the expenses that were paid with the PPP loan from your 2020 taxes if you expect to be forgiven? Or do you deduct everything, and when you file your 2021 tax return after the PPP loan is forgiven, do you then remove those expenses? It's not super clear because I definitely see most PPP loans being forgiven in 2021 if Congress doesn't go ahead and do the automatic forgiveness rule. So I think that there's going to be a lot of questions going back and forth there, and I just would encourage you, if there's no obvious answer by the time it's time to file taxes, definitely bring it up to your tax accountant so that they kind of consider those things. So from a bookkeeping perspective, though, it is clearer to include the forgiven PPP proceeds as other income so that you can more clearly track your taxable income without needing to remove expenses. and leave your records as clean as possible so that you can continue to monitor your year-over-year revenue and expenses. And so what we don't want to see is, like, obviously us taking out all of these expenses that we wouldn't include on a tax return and then looking at 2021 and going, hey, why was 2020 so much? Why did we have so few payroll expenses compared to 2021? We don't want that to happen. We want you to be able to manage your books. So if it were me, I would take the PPP proceeds once they're forgiven and move them into just an other income line item at the bottom of the income statement. Just so they're kind of on the P&L, but they're out of the way. Okay, so another big change that came with the PPP Flexibility Act is that even if you took the PPP loan, employers are allowed to defer payment of the employer's share of Social Security tax until December 31st, 2020. So the deferred taxes must be paid over the following 2 years, with half the amount required to be paid by December 31st, 2021, the other half paid by December 31st, 2022. Employers would still be responsible for FICA tax on the employee's wages. Okay. And finally, I want to make sure that everyone's aware of the Family First Coronavirus Response Act. This is a powerful tool that can easily be overlooked in the day-to-day of running your business. Generally, the Act provides that covered employers must provide to all employees 2 weeks or up to 80 hours of paid sick leave at the employee's regular rate of pay where the employee is unable to work because the employee is quarantined or experiencing COVID-19 symptoms and seeking a medical diagnosis, or they must get 2 weeks or up to 80 hours of paid sick leave at 2/3 of their regular pay because the employee is unable to work due to a need to take care of someone in their household that is currently quarantined, or school is closed because of COVID-19 related instances, but just a lot of stuff. So when you, as an employer, provide this sick paid time and mark it in your payroll software as FFCRA leave, you will get a payroll tax credit up to the amounts included in the bottom 2 rows of the table included. And if you have any employees that meet the criteria, I highly recommend looking into this credit further. Do note that any wages paid under the FFCRA cannot be included in the PPP forgiveness calculation. Okay, so thank you so much for your time today. Feel free to start typing out your questions in the chat box. You will get an email from us with a copy of the slides and the recording of this webinar in the next day or two. When you receive that email, please feel free to reply back and let us know of any other topics you're interested in us covering in the webinar, or let us know now by emailing info@honestbuck.com. Our passion is helping early childhood education businesses financially thrive, and we want to provide as many resources as we can to make that happen. So definitely let us know where we can help.